What's up, guys? Josh here. Got some advice to put the video down here. So through my face in here, so you guys can see me. Gonna rip through a trade today. This is the S&P. This is SPY. Obviously tracks the S&P. We got some crazy stuff going on in the market. Saw a post the other day asking, is the market in hard mode? The answer is yes. The market is now back in hard mode. It's been an easy mode for a couple years. Now we're getting back in the hard mode. So let me show you a trade that can cover your ass a little bit. If you take a look at what's forming here, this is what they would call a head and shoulders pattern in the S&P. It looks like that's what's starting to form. We did have what looked like some scariness here before, late in 2021. This is when we thought things were going to fall through. We did have a rally off of that as the Fed kind of backed off. We had this nice strong rally, some retests, but now recently it's gotten a lot worse. We have a downtrend in that RSI saying, hey, this is getting weaker, and we had a cross in the MACD. So let me show you as we kind of zoom in here. This is a closer chart of what you're just looking at. As you zoom in, you can see this. We fell back down, found some support at the 50-day, tried to rally, fell through hard through the 100-day, didn't even really pause. And then caught ourselves just a little bit on the 200 and then found some support here. This was actually support from back here, right? That's where that support came from the previous catch around that 426 mark. That's what they would call the neckline of this head and shoulders. So 4260 is about what you're looking at the S&P for the neckline. And then as we go back to this chart, you can see we did try and rally back up on some positive news, some good earnings. And then we fell back through support on the 100. And then what should have happened is we should have rallied here and we should have continued through if we were going to continue this momentum and this big upward trend, but we didn't. We had a short-term double top. And then we fell back through, found some support on the 200 exponential, hit off the simple, and here we go, falling back through. This leads me to believe we're obviously in limbo land. Russia and the tension with Russia is really what drove this back down and didn't allow us to rally up through it, as well as the Fed raising interest rates and reducing the balance sheet. So you can see again, MACD cross, and the RSI is not weak enough for people to be buying here. It's in the 30s, but it's in the high 30s. So this is a tough position to be in. So what that tells you is you want to probably buy yourself some protection. The way I am buying protection is like this. I am using SPXS. So this is a reverse or a bear ETF that's 3x leveraged, right? So every day it's 300% of what the S&P percentage is or the SPY percentage is in the inverse. So if SPY goes up 1%, this goes down 3%. If SPY goes down 1%, this goes up 3%. And what you're doing is you're basically just buying insurance, right? So here, this was whenever we had the taper tantrum before when the Fed was going to raise interest rates. This is obviously COVID. You can see this thing trends down because the S&P typically continues to go up, right? So again, you're buying insurance. Usually you don't need the insurance, but when you have it and something happens, it's a great thing to have it. So what I'm going to do is buy this leverage. You don't have to use margin. You can just buy it. The ETF itself is leveraged. And the way I'm going to buy this, because it's a speculative play and I'm not going to gain dividends on the stock or sell covered calls against the stock, is I'm going to buy options. So I'm going to buy call options on the inverse ETF. So I'm betting against the S&P. And I'm going to buy about a year out. I'm going to buy leap calls. I'm going to buy some at this $15 mark, which is where I saw a little bit of support before, this $15 mark, which is in the money. And then I also split and bought half the position at this really, deep out of the money call option here. So this is a high gamma play. This is a lower gamma play, a little more trade with the stock. But this is that, if you get a really big pop like we saw before, this should cover you a little bit more, where this will just cover you kind of as it trends down. You should be making money on it. So hope this helps, guys. God bless. Enjoy the day. Remember to like and subscribe.